In today's video, we're going to be having a look at the Aussie dollar briefly. From there, we're going to have a look at the RBA and some of my expectations for this evening. And then from there, we're also going to have a look at US farming and agriculture exports. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing to be looking at today is the Australian dollar. It reached 68 cents overnight. Now, this is the first time it's reached that level since before COVID-19 impacts were really seen in the beginning of February, end of January. Now, the reasons that we are seeing price sort of go up at the moment is that we have had some really good news about iron ore, with the idea of South American iron ore exporters not being able to manufacture and produce iron ore, and the same thing in South Africa. So there's been a little bit of a void there where there hasn't been as much supply available, so prices have gone up. Now that we have started opening up our economy and mining has continued here in Australia, we have started to fill that void by also filling some of the supply side of things. Most of these exports are going to China at this point in time, but we'll have to keep an eye and see if there's any more manufacturing. Naturally, if it does start going elsewhere around the world, that's going to be just as good for us. At this point in time, the expectation is for iron ore to become a $100 billion exporting market for this year alone, which in 2020 is an amazing feat, most definitely. Now, the next thing to sort of consider about the Australian economy and why the value of the Australian dollar is going up is because of the economy itself. It is that we are exiting lockdown. Businesses are starting to open up again. People are going back to work. We've had some pretty good stimulus and fiscal policies helping us through this period of time as well. Now, naturally, there are still some known unknowns. So some of these might include a second wave of infections if borders were to open up very quickly. Naturally, if we had a second wave, we'd potentially end up having another lockdown. There are a variety of other geopolitical events as well that are occurring right now across the world, namely the relationship with China that we currently have, and of course some of the tensions that are rising between China and America. There are a variety of other extenuating circumstances that might not be directly within our control, and so we should still be maintaining some level of caution. Now, the RBA has taken a wait-and-see approach when it comes to the Australian economy, and that's kind of being supportive to a certain degree. They've really been political recently, as recently as last week, saying that they think that we need more fiscal policy once we hit September. September seems to be the point in time where we're going to likely get cut off from some of the stimulus measures. It's that point there that we are expecting to have the economy fully restarted, though we can't be certain for it just yet. So what are we going to anticipate for the next things to happen? Well, we need to know today. I don't believe that we will be seeing an interest rate cut down to 0% or below. I believe it will be maintained at 0.25%. And from the ASX index and a few other places I'm looking at, the chances of it actually going lower are between 50 and 55%. So there isn't a strong amount of evidence to suggest that it is likely to happen that way. Not to mention the statements that we've seen in the last sort of week or two are indicating towards leaving it where it is to remain. Now, the other thing to consider is that the RBA doesn't necessarily want to go lower on the rate side of things, because it moves any option for them in case we do have a second wave, and or if we do need more monetary support down the track outside of quantitative easing. And of course, we want to try and avoid a situation like we've seen in Japan, where it has been a negative rate for so long and the quantitative easing has become almost an addiction. So from here, I'm not expecting a change today, but what I am looking for is the September expectations and what they are going to be talking about at the next lot of meetings. I really want to know and see if I can get any more information about what the RBA is thinking for this September period of time, including if they are going to be political in today's monetary policy statement. Now, from there, we have had some more information overnight as well about China freezing US farm imports. Namely, the biggest victims so far have been soybeans and pork. Now, regardless of what the sort of situation is right now with their dynamics, it does kind of put a little bit of pressure on the idea of the phase one trade deal being in jeopardy from going ahead. Now, the idea was as well that they were going to be putting about $38.1 or $2 billion towards agricultural goods being purchased from the US. At this point in time, I think it's about $3 billion. So they're obviously well behind the volume amount that they're meant to be doing to maintain that sort of contract. COVID-19 has not helped the situation. It's made it very difficult for them to be able to go with that side of things. But now that we've seen tensions continually rising, especially with the interaction that the US has had on the Hong Kong situation, and of course now the riots that are appearing in their own country, it is starting to be a little bit concerning. I do expect that we're going to see more tit-for-tat behaviour. traditionally, since the 1950s, we have seen China and America consistently going back and forth. One sort of attacks and then they retreat. Then the other attacks and then the other retreats. And it's always been like this. And so I am expecting it to continue and to elevate possibly a little bit over the coming months. But again, we're going to have to keep an eye on this situation as it develops all the way across. Now, the next things to sort of consider today are really about the riots. The riots have been ongoing for quite some time. We've seen nearly the 7th day of riots occurring now, and there have been a lot of comparisons made by Chinese state media between what's going on the Hong Kong situation and what's going on in the US. Naturally, not that long ago, Trump was talking about the idea of supporting the Hong Kong protesters, but then when it comes to his, the US side of riots, he's being very heavy-handed. So it's almost as if he's got hypocritical actions occurring at this point in time. Now, the Chinese media are reporting on these sort of comparisons quite regularly, and of course, people are able to make the links themselves. The other part that is going on is that the riots are actually hindering the idea of a recovery, and they are certainly risking a second wave. With all the people not adhering to social distancing and going out in protest, it's going to possibly cause another chance of attack when it comes from COVID-19. Now, hopefully that doesn't happen, but the chances of it are so high that it is going to give a number of economic issues if it does develop that way. We already have a lot of economic problems in the US, an unemployment rate near 20%. We're expecting at least a 19.6 as well at this point in time, but 20% is the round number here. And of course, we're expecting to see this sort of struggle to continue with the trade tension. So we've got a lot of evidence here to suggest that the US dollar is likely going to weaken, and it is about really identifying and looking at the scenarios as they come to us in the moment. Now, to look at the news that we have ahead of today, we have an Italian bank holiday. That's really the only bank holiday for today and for the rest of the week. We also have the RBA cash rate statement coming out, and of course, the cash rate monetary policy statement that's going as with it. So hopefully we do get some more information on that. Remember to keep an eye out for some of the political stuff within that monetary policy statement. But otherwise, I hope you enjoy the rest of your trading day. Now, if you do want to get in contact with me at any point in time, feel free to shoot me an email at talktoal@acy.com. And of course, don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.